All right, hello everyone. Welcome to this weekly trading roadmap, albeit it's going to be quite a short and snappy one, obviously. Um, we've had the Easter weekend. I was away last week, so been out of trading for a little bit. Um, and I don't usually, well, I try not to trade on the first day back of a holiday because usually your head's not really in the right place just yet, or at least I try and keep my risk very, very, very small. So what I'm going to be going through effectively is just Wednesday, Thursday, Friday, as I've come back just today on Tuesday. Markets were closed Friday and Monday. So just to get right into it, first thing we see here is the European consumer confidence. Today we had the U.S. consumer confidence, which came in a slight beat. No fireworks there, but ultimately, this is the figure that we saw today. We're getting tomorrow, sorry. The European consumer confidence. We also have the German CPI figure, the US ADP employment, which I don't really pay attention to too much. It's usually, for me, a good fade because literally the US non-farm payrolls is a good fade. So the ADP employment, which is a really bad indicator, in my opinion, of the non-farm payrolls, not really one to be looking out for a continuation. We also had the Fed's Evan speaking on Wednesday. Overall, I'll give myself pretty much a low relevance for that day. Risk allocation, this is wrong actually, just for some reason hasn't updated what I put in before, but if I had to give a risk allocation, I'd probably say about 10% right here, not too much. Moving over to Thursday, we've got UK GDP, European CPI, and then the US PMI and Fed's Dudley. UK GDP probably being the biggest data point of that day. But overall, medium relevance for that day, I'll probably give myself here around 40% of the week's risk allocation. But overall, just mind you guys, because I'm trading only 3 days of the week here, I'll give myself a lot smaller risk allocation than I'd usually do. So it's 40% of a smaller pot than usual already. And then moving over to Friday, we've got German, UK, and European PMIs. We also have the European unemployment, then the US jobs numbers, so the non-farm payrolls, the NFP, which has been a pretty decent fade in the last year, I'd say. Really, you want to be looking for any continuations on the back of any average hourly earnings, beats or misses. Usually, average hourly earnings is expected at 0.2% pretty much every single time. So any significant beats or misses around this number is really what I'm looking for any continuation moves. Overall, higher relevance on that day, obviously, and I'd probably give myself the rest of that, so 50% risk allocation for that Friday. Right, let's move over to a couple of charts. We'll take a quick look first at the Bund futures, which last week, as you can see, very, very mild week. Obviously, it was a bank holiday week. Easter weekend was coming up. Not much to really look out for. We had an inside week, but we took it out mildly. We pretty much had a range week, closing higher than the week before value. And coming into this week, we actually opened up with a pretty decent little gap outside of value. So we opened up around here. Our value area high of last week was at 162.89. That's our value area high. Our close of last week at 162.97. So we actually have a closing gap in here. And we also have a gap from value. So we have a gap from value and a closing gap at the minute. The fact that we've actually kind of had an intensive buy straight off the bat come into this area, we haven't actually seen quite a strong continuation. In fact, it's kind of been a bit lackluster and a bit range bound. So for me, I'm not that convinced yet, even though this profile does initially look bullish. I'm not quite convinced just yet, and I'd say coming into the rest of the week, if we can actually get back below and hold below this 50% mark of the week so far at 163.33, which is also the weekly high of last week, if we actually use this area as resistance, so we get back below this volume overhang, use it as resistance, I could see this retracing and trying to fill in this gap of value. Really, that's where I want to be looking to see if the market wants to hold a bid is at this closing gap, and then again at the value area high. If you guys just bear with me for 1 second, I'm gonna have to just start the data again. For some reason it does that every now and then. So that is pretty much how we're seeing the Bund very much in the short term. Obviously, if we can hold value above these areas, hypothesis is that we could potentially start moving back up to this 163.98, which we left back in the end of February. To the downside, if we do get back into last week's value area, which is 162.89, as we said, and use that as resistance is over here, so use that area as resistance, I could see or foresee a move back down to this 162.45, which is our VPOC of last week. Very simple hypotheses, things that we cover pretty much every week, very standard stuff. Obviously, if we've left that behind and come back in here, I could see that very much happening quite quickly. The key pivot areas you can see right in here, 162.28's value area low and value area high of that previous week at 162.20's. Good little pivot area, I'd say. It's well worth a bit of a trade. Also, the fact that we've had a couple of weekly lows just below there as well. So you kind of know where your stop is just below this area. If you're taking that trade, this is effectively your stop area, and you could try and get in around these areas and look for that move back inside last week's value. That's pretty much how I see the Bund for the rest of the week. I'm not looking for any fireworks, really. We've got the non-farm payrolls, really. That's the only figure I'm trying to trade potentially this week. Looking at the Euro Stoxx, interesting formation. What I'd like to point out to you guys is this is the ECB day. This day right here is our ECB day. So just so you guys are aware, we're pretty much smack dab in the middle of value of that week. Our ECB low here at 28.55, which we haven't really challenged yet, but as you can see, ever since that ECB, we launched that bazooka, the market hasn't even been able to take out the high of that ECB day. We've left an inside week in here. We barely took it out last week. We've left a little double bottom. We've got now a ledge. So if we just make this a little bit bigger for you guys to see. So we now have a ledge at that level there at 29.06, 3 TPO ledge, in which case I could see some decent downside if we break this area. If we break this area, I'm looking personally for this to move down to 28.55s. I think that's a decent target. If we take out those 28.55s, I think we could very much open up. That is a very crucial low. The ECB low, as we said, at 28.55s. The ECB low, if we puncture that level and use it as resistance, I could very well foresee this even challenging this weekly low at 27.97. And really, below that, I'm really struggling to see any sort of structure that can hold this market up. It's well traded through very quickly as well. There's no particular big VPOC or volume structure that this can lean on. And in fact, I think once we get through there, it could be quite a heavy sell. So I don't really want to stand in the way of that. And just with the way this is structured at the minute, small selling tail, small selling tail, small selling tail, small selling tail, but we're failing to get higher. We're building, heavier profiles. I could see that moving lower. I know I'm coming in with a little bit of a bearish bias, but that's my number one scenario, or my main or base hypothesis. Obviously, if this fails and we come back inside this area, obviously I'm looking for this to test last week's VPOC at 29.70. That's a very crucial area, 29.70 to 29.77, which is our value area high. We hold these areas, we're probably looking to stay in value. If we get above these areas and use them as support, we could be looking for a move to take out these highs in here, in which case the market is looking to stick to that bullish bias in the short to medium term. Right, let's take a quick look over just at just a couple of other charts. Just want to take a look at the euro, which the euro at the minute you can see has an inside week with high at 112.84 and low at 111.42 in the spot market. Keep an eye on that, guys. We've come up to that very important sort of triangular pattern resistance, which we couldn't quite close above it 2 weeks ago. A break through this area could mean we get that impetus to break these highs in here. Otherwise, if we cannot and we break down lower, we're basically smack dab in that range area we've been since the beginning of 2015. We haven't really moved that much. So really, that is the only kind of scenario to the upside that could change that sort of scenario and maybe give us that drive to test higher. Obviously, we do have a lot of other resistance areas in here, but on first break, I would assume that there could be some decent little upside in that currency pair. Just keep an eye out for that. Looking over at the dollar yen, I just wanted to point out, obviously, since last time we spoke, we had a little bit of a false break in here. As you can see, we closed back inside. We've just been drifting all the way up. And as you guys can actually see, we've had 1, 2, 3, 4, 5, 6, 7 days of one time framing. And now this day would be the 8th day of one time framing. And as we well know, when we have one time framing patterns, if we take out one of these previous lows here, any one of them, of the first one really, then you're likely to see some downside, a quick flush as the sellers step back into the market. So just keep an eye out on that. Obviously, keep in mind we also have this trend line in here, which if broken could give us a little bit of impetus back to the upside. I prefer these patterns. If this market's really going to rally to the upside, I would prefer it in a context of a bullish equity market and bullish risk markets. But it seems like the equity markets are not really holding their bid so far. The commodities are blowing a bit of their steam out and coming off a little bit now again. So if there's a bearish context and the equities and the bonds are bid and the equities are coming off, these commodities are coming off, I'd much rather play the one time frame break to the downside rather than look for any breaks to the upside. So that's kind of how I see the dollar yen. If we just take a look over at the commodities, actually, just so we can wrap this up real quick. As you guys can see, the steam that we've been seeing so far in, at least in gold, which has been one of the best performing assets this year, has been kind of coming out of the market. We've been holding this resistance at double top at 1279.9. We haven't really been able to take that area out and test those 1303s. So for now, we're coming right back into this really crucial support for the bulls, which is this area in here, 1193 and the 1189 area really is the key area. You can see super important support for those bulls. And obviously, we want to take a look at, when we get back to this falling wedge trend line, which at this point would be a pretty crucial little area. And if we did come back in there, then it's not looking as immediately bullish, and possibly we're looking at maybe a bit of a deep retracement back into these areas. But we'll see. We'll see how that pans out. But overall, it seems gold is losing a bit of its steam. Oil as well, losing a bit of its steam. Last week we posted a swing rebound into the previous week's range. As you can see, we couldn't close above this high in here. This week we're already starting off quite weak. We've taken out this previous low, and we're trying to challenge now below these 38, 39s, which was a pretty critical little area. Below there, obviously, the very, very critical area that we want to keep an eye on for the bulls is these 34.82s. We mentioned it numerous times. That double top in there is so important for the bulls. If we hold that area, for me, ultimately, we're short to medium term bullish. Long term still looks very much bearish, but just keep an eye on that level if we do get there this week. Copper also, just to keep an eye on that. We've been range bound in this area, which is not really looking too good for those that were looking for the full target of this inverse head and shoulders. We broke that over here. The target was around 234, I believe, somewhere in this area in here. We haven't quite got there. I think we've gotten close enough, really, but if you're really looking for the full target, we haven't got quite there. We've been holding above this previous low there, 222.75. We couldn't quite hold above it last week. We actually closed below it, and now, as you can see, we're on the verge, literally, of breaking this inside weak pattern in copper, which I'll just point out that low and high for you. So the low at 221 and our inside week high at 229.45. So currently we're actually trading below those 221s. So potentially we might see a bit of an offer through that area, and seeing as we've been consolidating in there for a good 3 weeks now, there could be some decent downside back down to these important 214s in the copper market. So keep an eye on these setups. They all look generally like there's sort of a bit of a switch in the theme. Overall, looks like we could be setting up for a risk-off week if they follow through. But if not, we also have our backup scenarios, so just keep them in mind as well. Anyway, thank you guys very much for listening in, and have a great trading week. Bye-bye for now.